There's a number of questions like Zoom. Can you break down the Zoom movement this afternoon? Almost 20% swing. And, so there were some questions about Lemonade dropping. And, generally, when I look at all of these stocks that have taken a step back, it's, they're up significantly over the last 12 months. And, we kind of joked about Zoom's forward-looking guidance, and I've seen this consistently. We've gone about a year with companies getting off the hook providing guidance, and now all of a sudden they provide reasonable guidance with still an uncertain environment, and they get punished for it. So it's a little bit of the stock market game. I know it's super frustrating if you bought Lemonade at 150 or whatever, and now it's 110. But as Jason said, I look out 5 years and 10 years, and Lemonade is a much bigger company, and they're still getting their feet under them. And this is a good time to just watch and learn, and look underneath the business and who's running it and what kind of decisions they're making, and then add to the stock if you feel comfortable with it, and you can get it at a lower price.
So sometimes you always see more volatility around earnings, right? And sometimes it's easy to mistake what a bunch of traders or even some investors are doing, long-term investors might be doing, with anything the company actually did, right? Sometimes people are just looking for an excuse to act. So sometimes don't look too hard, I think is the big one there. Jamal, you see any questions in here you want to grab?
Yeah, I'm going to ping off that. And I like sort of these behavioral type questions, because I think in the long run, those are the ones that are going to add the most value. So I see one from Matt S. that says, when you say hold your stocks for 3 to 5 years, does that also mean you don't sell certain lots of them throughout your ownership as the stock price fluctuates? I'm going to answer this question as a normal, rational, full investor would, fully admitting that there have been times where I've fallen victim to hesitant selling or anything like that. I think ultimately, when you see sort of stock fluctuations, the key is for you to take that long-term perspective, that 3 to 5 year perspective, and if there is a very large movement, one way or the other, oftentimes take advantage of that. Like we've said with Zoom today and others, they've sold off when the long-term fundamental story remains sound. The best way and the way that brings the most long-term wealth is to take advantage of those situations to add shares, or to, if you view, as I said, the long-term story as being sound, take advantage of sort of Wall Street's myopia and, look at perhaps buying more shares than perhaps selling. So, we don't want to be the type of firm that encourages short-term trading, racking up large tax bills. So the answer to the question, what I try to do, fully understanding that investing is also an emotional component to it, is to look at those as opportunities to buy more shares and to stay focused on that long-term opportunity.